Can you count to the number 2? Because if you can, I'm going to walk you through everything to know for this week ahead. That's right. Only 2 things. Hi, my name is Justin. And on my channel, I'm going to walk you through exactly what I am going to do this weekend. I plan to cross the road. I plan to make more money by the market going up. But what I'm going to do first is just make sure the light's not red. That's it. I plan to cross the road. I hit the button. I'm actively walking. I'm just going to look both ways. I'm not going to waste any time. Here's my plan. Here's exactly what I plan to do. There's news. We know what that is. My algo right now says it's time to buy the dip. That's what this note right here says. Higher lows are sufficient because we're in all-time highs. That's pink for pivot. And if we actually do get a slam down of roughly, how much would this be? About 10%? Oh my goodness, about a correction. Actually, no. If we go down to fill this gap right here, which goes to May 5th, that would be 9% or nearly a correction. Probably going to want to buy that, so grab your chips. For my notes, I'm saying that the S&P 500 right now was also bullish. I'll go through those notes in a moment. Basically, it comes down to this. For us to actually break bearish, we would have to actually form 2 daily lower lows. That is the only way that right now we're actually going to get a bear break. So if we're going to go mega down, what would that look like? We're looking for about a 1% decline. Mega down is 1%. It is now. The good old days of negative 1 to 4% per day are kind of gone. Here's what it comes down to. On the weekly chart, for us to actually to invalidate number 1, we have to decline by roughly 1%. And the futures just opened, so we can see we're halfway there. Oh my God, halfway there? Yes. So between overnight trading, which happens starting right now, it happened 7 minutes ago, until where we open at 9:30 tomorrow, we might get a snapback, might go down further, or we might go nowhere. Stocks can only do 3 things: up, down, or sideways. What are we going to do? Hey, we're actively crossing the road. We're just going to keep looking each way. So no earlier than Tuesday are we going to get bearish confirmation. Otherwise, it's fully bully boomtown, and we're not going to get any evidence based on the weekly notes, which we have right here. We're now going to scratch out the ones from last week and scratch out the one from last week. There we go. Buy the dip on everything right now. Oh my goodness. Actually, that's cautiously bullish. That's my bad. I got a little bit too excited there for one moment. I apologize. All right, cautiously bullish and bullish. Going back to our notes, the only way we're actually going to get bearish on the weekly is if we actually print a lower low. So that's what we have to do to decline by 1%, roughly 1%, and we're going to lose that weekly low. So we're halfway there, and by printing the lower low, that does not mean we're actually going to go lower. What do we have to do? We have to actually close below that. And there are reasons why that could actually happen this week. So let's go to our bull and bear recipe. All these links are in the description for free resources for you as well. Right here, the way for us to get bearish is we have to print a lower low. But more importantly, we have to close below it. So if we're looking at a weekly candle, which closes out every week, you guessed it, we're not going to close it out any earlier than Friday. The earliest we would go to 4 out of 4 bear or fully red would be next Friday at 4 p.m. There's a lot of work for these bears to do. We can take the elevator down. But as of right now, the news was pretty bearish. So what's the reaction? Man, 0.5% down. Who cares? I don't. I didn't even I didn't even do any prep until about 30, 40 minutes ago because honestly, out of the stuff to do. Stocks are fairly mixed right now. There's extreme greed though. So why so bullish? Well, because right now, in an ominous sign, sellers are vanishing as U.S. stocks smash records. Why? They're hard to scare, these strong bulls, these retail bulls. Yeah, they're not leaving, right? We're not going anywhere. Market resilience challenged by Trump's weekend tariff salvo. Not really, buy the dip. All right, this looks like guacamole. Nice green dip. It's not even red yet. U.S. inflation to pick up more. We'll see if this wall of worry has anything which can knock these bulls off. This is the week to do it. Trump's successor may struggle to deliver the rate cut that Trump wants. Okay. Risk of Powell ouster is underpriced. Okay. Oh my goodness. Look at the hot dater. Yes. If you could please consider smashing a thumbs up or subscribing to the channel. Thank you very much ahead of time. This data is pretty hot. If we have a look here, those are pretty hot numbers. So the number on the left and the right just shows the forecast and the previous number. So core CPI, it's going to go up 3x. It's going to triple. This 0.3 compounds at a number that is too high. So those two things we just looked at for Powell, it could happen. CPI on Tuesday is really important. I already have it in my notes, so just stay tuned. There's also 5 themes we have to look for earnings this week. We're going to go through this on the video tomorrow. There's a lot of things we got to pay attention to as earnings season kicks off. It's really looking to the banks. All right, so here we go. I gave you the notes at the very outset. Here are the key dates, though. So what I really talked about was if we print the lower low, are we going to close below it? Because if you look here, now I'm using some emojis to make it a little bit easier or visual to digest. I'm a visual learner. Maybe you are too. So this week, I went through the earnings calendar, which I just showed you. Sorry, the investing calendar, and into the beginning of the week. If the bears are going to take us down, like they better do it now, right? They're only halfway there, right? These weak bears. That's right. I'm going to make fun of them. Now I'm the big Sammy, right? The big salmon at the top of the river is making fun of these fat bears. They can't get us. No. So if they couldn't do it on Trump with the increase in the tariffs, well, then when are they going to do it? We're already halfway there. Well, again, if we're looking for a range of outcomes or a matrix of outcomes, what could happen is that there's the reaction to what Trump said onto the rest of the world. I don't know. There could be a feedback loop. Other countries retaliate. Does Trump escalate further? I don't know. Tuesday, we're expecting hot CPI. On Wednesday, we're expecting hot PPI. Oh my goodness. And Europe inflation is mega down. Yes, it is. Then we have earnings kicking off. The notable one, you can see the eyeballs. That's for Netflix on Thursday after the bell. Okay, now we know the setup technically. Now we know the fundamental backdrop. Now we just watch for the reaction. That is planning, assessing, or proceeding. Or again, you want to cross the road, right? Hit the little light. What do? You start walking, you look left, you look right, and then you proceed. Look left, look right. That's how you manage to not get hit. Yes, there's accidents, which means sometimes things we don't want to happen, which means if you don't continue to look left and look right and you're looking at your phone, you might get fired. That's right, you might get fired. All right, all that in mind, tell me what could happen next, because you're telling me you're mega bullish. I am. But now you're saying that there's bearish evidence. There is. And this is how I would actually action it. For me, personally, I'll show you. Right here, I've pre-approved some orders. So let me actually go through from the beginning here. Let's go back to the beginning. And let's just go back to the chat room, actually. Let's go back to here. So in the videos, I shared all the news. For the algo here, here's the levels. I'll give you all the goods this week. Here you go. There's exact levels. Weekly lower low, weekly higher high, and all the numbers in between. All right, that's the first one. Let's go back. Second one here is now, I still generate these. Those will come later. My notes are really simple this week. The reaction to Trump tariff is important because we also have hot inflation. All that matters is, do we defend the low? And if we do or do not, is it a failed breakdown if we lose the low? That's going to be a snapback. That's the second half of the week versus the first half of the week. Otherwise, we're scratching out some bullish evidence and we're going back to being more bullish. We're going to buy the dip. Also notable here that if we form a higher low on the weekly, that's going to be at roughly 618, and that would be sufficient to maintain the higher low going into a monthly close, which would get us to a green light on the monthly, which means that I'm forecasting right now, like the weatherman, that green is going to continue fully bully boomtown as of right now. If we do number 1 and number 2, like I mentioned at the outset of the video. Let's go back to those because I know it sounds so simple and I'm making a bit of a joke because trading should not be hard. If you're a technical analyst, just look at the technicals. We're bullish. Last thing here, because I'm just winding down. If we look here to the weekly chart, I talked about this. Right here, we have a bullish engulfing candle. It's a weekly bullish engulfing. 2 candles have happened since then. Only 2. 1, 2. All right, if now we go to the daily chart, that same pattern is forming. Really? Where did it happen? Oh, I see it. Well, hopefully you do. Why? Because it's bull. What did I just delete? Okay, there we go. Delete the lines. There we go. Oh, bullish engulfing candle. Then it gapped up and went higher for 1, 2, 3, 4, 5, 6, 7, 8. That could be 8 weeks if this pattern plays out. Again, I'm not Nostradamus, but it could happen. It can only go up, down, or sideways. What if the higher low is defended? What if we keep going up? I think people are going to have a hard time believing it. They might get a little bit of FOMO. And we just heard about how these bulls are hard to scare. Maybe we just got to scare the bears. They're going to cover higher. Why? Bear fuel rally. Let's go. All right, inflation, numbers. We got some alerts here. Here you go. Here's the exact things I'm looking at. I would order Berkshire Hathaway on Friday. I already own it in my 401k account, full disclosure. I would also buy SOXX, and there's 2 or 3 other names that I would also buy. Finally, here's my current portfolio for my Elgo account. Here's the exact things that I purchased. I bought SGML, I bought Donut, and here's my current holdings. It's everything that I have for my closed positions. We're working to make this more transparent and a little bit easier to follow along. Last thing, let me just go back here because I want to show you one more quick thing. So if now I go here to my 401k account, I'm actually going to show you everything that I'm doing this weekend. So as of right now, here's my exact portfolio. This is my small little 401k account. Everything's current. If you want to pause the video, you can see everything that I'm planning to do. Why? Because you watched all the way until the end. Here's my current allocation as well. So I'm planning to make a couple of quick changes. Here's the summary. If the market does go down, I've now realized some profit. You can see down here that my closed profit and loss for 2025 is at 5.8%, which means I've sold some stuff that has done really well. Those would include names like SCDG, like Wolf, like Dollar General, things like some Tilray and some other names. And I've bought other more boring stuff which shouldn't move as much. So I'm just kind of rebalancing. All the numbers are updated. And what I'm really showing you now is that if the market was to go down, like I mentioned, to God forbid that dip or the correction, right? We're going to get some, it's going to be salsa this time. It's going to be red. It's not going to be guacamole. No, guacamole goes bad, right? It gets a little bit moldy. Salsa lasts longer. That's right. So I want to sell some EWZ to rebalance into India. That's what I plan to do. If we go down, if we don't, I'm not going to do anything preemptively. We got green lights. We're on the highway in cruise control. But if I have to suddenly stop, I do have some cash to deploy. I'm currently at 27% for my cash allocation. I would reduce that to 20, and I would buy Intel, Plug, Berkshire Hathaway, India, Novo Nordisk, and Wendy's. That's my plan as of right now. I walked you through everything I'm planning to do, and I'm showing my face this weekend, but not on the video because I am slowly transitioning over time. So if you want to learn more about me, you can go to theelgo.com. But if not, click the video on the left and come hang out on Monday morning if you want more info. Thanks so much.